The surplus lines industry is getting smaller, at least in terms of the number of wholesale partners brokers are choosing to do business with. Patrick Ryan, chairman and CEO of Ryan Specialty Group, says that Aon's announcement this year to limit its wholesale partnerships to just 2 brokers is a trend that will continue. In this interview from the annual National Association of Surplus Lines Offices annual convention in San Diego, Ryan says the industry will continue to see brokers and carriers downsize partnerships. Here's why.
Well, it's new to be narrowed to that degree, but you're finding many retail brokers reducing the number of wholesale brokers with whom they do business. And I think that that's going to continue. And it really it comes from the impact of the costs that it requires to deal with a large number of people. It also, I think, gets to focus, and people are trying to focus very much on their business to be able to grow in these very challenging times. So I think not only is it a trend now, but I think it will continue. And I don't mean to say that there won't be room for boutiques. I think there will always be room for boutiques. But I think that retailers are going to narrow the number of wholesalers with whom they transact business.
Surplus lines carriers are also looking to reduce the number of wholesalers they choose to do business with, Ryan adds. Fewer suppliers help to spread the risk.
The insurance business is really about the spread of risk. And people want to have a spread of risk, but they don't want to have inordinately high costs attached to the spread of risk. So if they can get a spread of risk, different kinds of risk, some higher hazard, some more commodity based, and they can get it from fewer suppliers, that's what they're going to do.
Current market conditions are driving another trend in surplus lines. At least 2 surplus lines carriers, who are primarily wholesale broker carriers, have gone direct to the retail broker. But Ryan doesn't believe that this trend will stick.
I think it's a phenomenon of the soft market. We have to grow, and maybe we need to deal directly with large brokers because they have a lot of volume. I think it is not going to expand that much. In fact, I could say, and this maybe is my sort of chronic optimism, but I think it's probably going to shift back. And the reason for that is it's just not access to the markets that it's all about. It's really about where do you access, who within the insurance carrier are you discussing that risk with? What is the spread of difference really for your going direct? And what is the give up in your hit ratio, so to speak, on winning the business? And what value add are you missing from not having the wholesale intellectual capital? And I believe that it's a big loss. And I think that will be a trend that will subside and shift.